Good evening. This is the Elliott wave update for the S&P 500 for Monday, April 11th, 2022. The markets continue to be very interesting and continue to perform in line with both of the wave counts that I have been running congruently or in parallel with each other. But it does seem that the market has now finally given us some follow through in a direction that I'm able to switch the alternate view over to the preferred view and just kind of reverse them. They will continue to run in parallel with each other until I got stronger confirmation that what now is the alternate view, which would be that we still have upside to do to complete intermediate wave 2, is totally out of the picture. We're getting close to that level, but we're not quite there just yet. So as you can notice, I've already updated the preferred view here on the charts, marking the intermediate wave 2 is complete at the 46.31 high. Off of that level, we started the intermediate degree wave 3 decline. And I'm just changing this labeling right away, realizing that I was 1 degree off. So bear with me, because what we have started now is we put in minor waves 1 and minor wave 2, not minute. They are minor. And so I'm just going to update that quickly so that we are all on the same page here in terms of that. And that switches this over to that minute degree. So I was 1 degree off when I did my labeling before. Thank you for your patience while I make my correction so that we're all in agreement with what is happening now. So in essence, what we're seeing now is the development of the intermediate degree wave 3 down. This internal here is for that third wave on the intermediate degree. And if we go back up, I'll show you how I arrived at that on the daily. I run from the high down to the bottom of wave 1, up to the top of wave 2. That gives us the estimates for the Fibonacci extensions for a third wave down of an intermediate degree. That third wave down of intermediate degree, in my opinion, will get us to 34.96. That's where wave 3 would be equal in length, would be equal to 1.618 times the length of intermediate wave 1. That brings us down to 34.96. And if you remember, I have been discussing that, in my opinion, wave A of this larger supercycle degree third wave, the height of supercycle degree 3, and so we're in a supercycle degree fourth wave correction. I think the wave A of all of this will bring us down to 2175-ish to complete wave A. And we're now in a large section that will make up for all of this playing around above 4,000. And I think that it'll just start to kick in. And what's going to bring it about is basically everything that I've laid out in the big picture updates, both for the S&P and the NASDAQ, and then again for interest rates, and then again for gold and silver, as I presented yesterday. All of these are running in conjunction with one another in terms of one feeds the other, feeds the other. And if we sit at the top of that food chain, as I've been discussing, that is interest rates. And interest rates are the #1 hot topic. And the market actually tried to blow it off saying, oh, we've already priced in all of that. There's not going to be any run on inflation, et cetera, et cetera. That was a line of bull. And hopefully people have not been caught up in that story. But that's what got them to propel the market up to this level. And I just think it was a setup. And therefore, based on that, we're dropping. But wave 2s can be set up. So I got to tell you, it fit the Elliott wave perfectly. So being that this is the start point of the intermediate third wave, Intermediate wave 3 should definitely take out the low, which right now I'm going to use that one, 4101 basically, but it's actually a little bit higher. But that's the level that it needs to come out and take out 4100 as a minimum. Under the current count, wave 3 would be equal to wave 1 at 3930. So it does the task, but that is really telling us that wave 3 is only 100%. So it's only equal to wave 1. And I believe when we're doing the Fibonacci comparison, we have to think of this. That wave 3 will bring us down 1.618, which is 3496. That area seems bigger. And there's continued, we can drop all the way down to 34, or all the way down to here. Eventually, yes, I do believe that this wave A will bring us down to 21. How we're going to get there is anybody's guess in terms of the intensity, but this third wave on an intermediate degree is going to be, I believe, the most intense part of this first larger leg of our decline. And so therefore, that's what I am looking for. And I don't want to present it as if it's bearish. I'm not talking bullish or bearish, folks. I'm talking technically. I'm talking quantitatively. There's enough economic and geopolitical fights going on around the globe that back up a large decline taking place. So I'm giving you the technical picture that will support that, which has been indicative of this move happening. So this is what I'm now pulling together. So I don't want to take a bearish posture or a bullish posture. I'm taking a market posture. I come in and I trade every day. I would like to see the market go in both directions. It makes for bigger trading. But if it wants to be directional, I'm absolutely fine with that too. So when I present the technical picture, it actually just helps me to determine where are those larger moves going to come in? Are they going to be to the upside or are they going to be to the downside? Well, being that we're in an intermediate wave 3 down and suggesting that we're in that 3 of 3 of 3, it could get pretty hairy. Now, what I can say about these internals, I can add another layer. If this is wave 2 and it basically is right there, then I've got 1, 2, 3, 4, 1, 2, 3, 4, 5. So I'm going to go one better, and I am going to put a sub-minute wave 1 right there. And by doing that, it just, nope, I didn't mean to do that. I meant to do it. No, come on. I want to do this. Come on. Thank you. It shows you, number one, the intensity, because again, remember what I've talked about, that third waves are the longest and the strongest. Well, what makes them the longest and the strongest is that they subdivide. It is where we get that extended wave. And what extends inside of the third is its third. Well, here we are, minor 1, minor 2. Now we're starting minor 3. And we have minute 1, minute 2, and we're starting minute 3 of minor 3 of intermediate 3. But guess what? It subdivides again. So I have sub-minute 1, possibly sub-minute 2 right here. And we're going to get ready to break below 4,400. Would not surprise me at all. They're going to be desperate to hold on to this stuff, but I don't think it will work. So whatever reason they want to hold, then it's fine with me. But I believe it will be surrendered and we'll start heading below 4,400. Now we've been there. We've witnessed this. We've witnessed that they try to pick a support, they try to pick a line in the sand, and it just doesn't hold. So, but if I had to, and I could say that this is sub-minute 1, sub-minute 2 comes in teeny tiny. Only got up there to 13-ish, wherever that line is. So that would produce that we are in the sub-minute 3 of the minute 3 of the minor 3 of the intermediate 3. It's the biggest part of this overall third wave decline. this is where we should continue to see some fairly strong acceleration down. Right now, we're still waiting for other markets to come in and join the party. We got Asian markets to open. Then we have European markets to open. Then we in the US get it back. So we'll see what happens, but I am anticipating continued stronger downside. Now, let's add some additional Fibonacci extensions, but now let's look for this minute third wave. Where can that come down? So I'm going to go 1 to this one, up to that 2. 45, is it 45.19? Let me go over here. Yes, it is. Oh, come on. Come on. All right, I'll consider that good enough. So what we're looking for in this minute third is more than likely here, 1.618, that the wave, the minute third will equal 1.618 times the length of minute 1. That's 4288. Now it's a good 120 points from here. But once we can get minute 2 in there, we're going to have additional numbers to go. So we'll see where we can get matchups. We can get crosses to where they overlap. We have some overlap between 4288 down to 4280, one more, 4275. So we get a little bit of crosses there, and that's going to be a little bit of a zone. And then we will continue to be looking for lower levels, but we'll work our way down. So what I'm looking for tomorrow is a continued downside. Right now, the bonds are still down. The bonds opened down further than what they had already had produced during today. The 30 years already down 13 pips. So that's continuing. That's going to continue to put pressure. We're now realizing that 1 3/4% hikes over 6 or 7 months ain't going to cut it. Inflation's got a hold of this United States, and it's really grabbing the rest of the world, and it continues to find reason to increase. We've got some solid inflationary numbers coming out this week. Let me just review real quick. Let me just pull something up, and we're going to go here. For example, tomorrow, before the market opens, we have CPI. We have PPI final demand on Wednesday morning. We have jobless claims on Thursday morning. And then we have industrial production on Friday morning. So we have a lot of economic numbers that are intertwined and related to inflation and what happens when they don't come in as expected. So I am looking for additional downside. So I think that we also, as the volatility increases, I'm going to say it again, downside moves are going to be quick and they should be pushing further. But then when we get a bounce, they're likely also going to be just as quick and cover more territory than you might anticipate that they should. So I'm going to leave it right there. Continue to use the moving averages, continue to use the Elliott, continue to use the Fibonacci, use it to your advantage. Have a great trading day tomorrow. And our next update will be on Tuesday, the 12th.